Good morning, everybody. How are you doing this morning? Welcome, 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 welcome. Welcome, 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 welcome. Get my phone together. All right, then. Let's see who in the chat. Let's see who in the chat before we get it started. Good morning, here to learn and share. Good morning to you. The birds are chirping. Nice weather here in Columbus, Georgia. What's up, Lil Hawk? What's up, Mendez? Good morning, good morning, good morning to everybody else that's going to be pulling in. Let's go ahead and get to it, man. Let's get to it. Let me bring the mic a little closer. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, you know I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbit, hanging out with me, my homeboy back over my shoulder here named Spidey. That beautiful young lady you see back over there in the corner, that's my sweetie as I get my light on. If you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day, and I talk about the price action, dealing with the S&P 500. Some people like to call it the market, depending on what type of trader you are. Some people call the NASDAQ the market. Some people call the S&P the market. Some people call the Dow the market. Just depending on what you like to invest in. I day trade ES futures, S&P futures, swing trade SPY options. So I talk about the ES primarily. I look at the other indexes so that we can see if we have any divergence, so we can see if we're diverging or if the market is moving symmetrically. Now, if this sounds like something you're into, consider subscribing. Why am I asking you to do that? Because we're almost to the 2,500 that we're trying to get to. We're that close, that close. So if you share it with your friends, or if this is your first time, if you want to be like here to learn and share, 9 times out of 10, here to learn and share is the first one in the chat. Because the birds are chirping and the early bird gets the worm. You hear me? Hey, man, we're going to go ahead and get into it. Oh, before we get into it, speaking of day trading futures, if you are interested in trading for a prop firm and you want to choose Apex, I'm not sponsored by Apex, but I do have an affiliate link in the description below. Apex is just the prop firm that I chose to go with. There's plenty great prop firms out there, but Apex is the one that fit my needs the best. So if you choose to use Apex, please click my link. Right now, they are having a 90% off sale for all of their evaluations. You get 90% off the amount of the evaluation for the first month. And if it takes you longer than 30 days to pass the evaluation, you get 80% off every month after that, however long it takes you to pass it, right? That link is for 50% off. But when you click on that link, just change the code to save 90. It'll be save 50 when you use that link. But just put the coupon code in for save 90 and you'll get 90% off. And if it take you longer than 30 days to pass it, it'll be 80% off the next month when it renew. But once you pass, it'll stop charge you every month. And then make sure once you pass to choose the one-time assignment fee. Because if you choose the $85 a month, you'd be like, Tim, I don't want to pay. Just say if you got a $150,000 account, right? You're going to have to pay like I think $220 assignment fee, whatever it is, right? But choose that. Because if you're trading for a prop firm, you plan on trading this a long time, right? And if you choose the $85 a month, they're going to charge you $85 a month for the entire time that you trade that account. So if you plan on trading this account for as long as you can, just pick the one-time assignment fee, pay the 200 and whatever it is for the account size you got. That way you ain't never got to pay no more money ever again, except for the 90-10 split after you get your 25,000. After you get your 25,000, you just have to pay the 10% split. That's it. Choose the one-time assignment fee, man. Stop playing. Don't pay no $85 a month, man. Stop playing, man. She say she only first because that front row seat with little Timmy Rogers break. She need that front row seat. Internet connection on pay. You feel me? It like as soon as I make an event, I sit here sometime until it be like 8:56 the date. Look, she made this one right here at 8:54. That mean 8:53, right? And then Lil Hawk was at 8:53 too. I'm talking about swooping in. You know when you be at Walmart and you be about to turn in, and then somebody just swoop around it. Swoop it in. Swoop it in. Hey man, I think we just separated the wheat from the tail. So let's go ahead and get into it, man. Let's get into it. Let's pull up the Chizarts. Hey, Black Spiders, I jollipies to y'all. Well, y'all ain't know I was gonna do it, but I had plans on sending y'all. I've had plans on sending y'all a screenshot of my charts last night. Right, this is what I marked out last night before I jumped in the shower. Let me see. It was around about. Let me see where we were at 9, 10. Yeah. Because around about 11 something, I was fussing at my son for not being in the shower yet, and I was already done. So we're just going to mark there. It was pretty much like that. It was pretty much like this. This is pretty much what the chart was like when I marked it out. Of course, I left the new week opening gap there. I marked out this 5-minute breaker stemming from the 7 o'clock candle on April 12th. I marked out this 5-minute breaker. This is a bearish breaker. Marked out this 5-minute bearish breaker stemming from April 13th at 7 a.m. candle, right? And then I marked out consequent encroachment of this weekly gap. I didn't put the date on there, but it's back over here somewhere around. So the 17th and back there, it's the weekly gap below where we at now. Everybody know what that weekly gap is. Look at the weekly gap below us. And then I got a daily fair value gap that's resting down there also, right? Up under the sell side. Up under the sell side from yesterday, right? That's up under the sell side. The consequent encroachment in the gap is under the sell side from yesterday. Then the imbalances, and then it's another 5-minute breaker that I marked out right here on the yes, it's a 5-minute breaker. Another 5-minute breaker. It's up under this 3 p.m. candle from yesterday, right? It's up under this. So I ain't got the exact time because I ain't on the 5-minute level, but it's up under this 3-minute candle inside there somewhere. And then the imbalance that I marked out got a 5-minute bearish fair value, 5-minute SIBI up at top of another 2 5-minute SIBIs. Then we got a 3-minute SIBI that we was in at the time. I mean, a 5-minute SIBI that we was in at the time. Then we got a 5-minute BISI below price that's at the bottom of the bullish fair value gap. I mean, the bullish breaker that was over there. So let's drop down to 5 minutes so I can give you them exact candle times. So The bullish breaker was in between the 3:05 p.m. and the 3:20 candle from yesterday. That's the bullish breaker. The bullish fair value gap was the 4 p.m. candle. The bearish fair value gap was the 110 candle, the 11:25 candle, and the 11:20 candle. And then the new day opening gap was from 4109.25 to 4110, a 1 point new day opening gap, right? So that was everything I marked out on my chart around about this, you know what I'm saying, 10 o'clock time frame up in there. We was consolidating when I marked it out. Meant to send that out to y'all, but I didn't. I got sidetracked. Now, let's look at what price did in relations to everything that I marked out. We consolidated up until we consolidated at midnight. We came down to close to the low of the consolidation. Then we pushed up and took out the buy side above the consolidation at 145. So from midnight up until 145, we pushed up. We were consolidating right along the new day opening gap, right inside that 5-minute bearish breaker, the one that we spoke about. We had two bearish breakers above us, pushed up a little bit further into that SIBI, taking out the buy side above the overnight consolidation. And then we eventually made our way back down into the bullish fair value gap, the BISI from the 4 p.m. candle yesterday, inside the bullish breaker, right? And that was at the we made the low at 4:10 a.m., pushed back up into the new day opening gap, that bearish breaker, and that SIBI. We stopped at that SIBI, coming into this 5-minute SIBI right there on the 310 candle, in the exact same at the breaking market structure, at again the new day opening gap, the bearish breaker, and the old SIBI that we was talking about, right? Push back down, stopping at the top of the fair value gap from the 4 p.m. candle, came back up into this volume imbalance and order block and fair value and SIBI. So you got a SIBI on the 550 candle. You got a bearish order block from the 530, 35, and 40 candles, right? And you got a volume imbalance in between, 5-minute volume imbalance in between the 545 candle and the 550 candle. Got into all of that and then dropped it like it's hot and attacked the sell side. Boom, we attacked the sell side, took the sell side from yesterday's low out on the 710 candle. When I came back from dropping off my kids, I noticed that it's 755 candle. I was this tempted. I was this close. I'm sitting there and I'm watching it. I saw this take off, right? I saw this expansion take off, right? I said, if we close above this fair value gap, I'm going to try to get me an entry before I take the boys to school, right? We closed right at the top of the fair value gap, and then we melted back down. I'm like, this is a beautiful entry. We coming down. I'm watching it. We coming down here. I'm watching this fair value gap here. I said, we got a fair value gap right there. I'm going to go long in this fair value gap right here, right? So we coming down, and my son came in at 7:44 and was like, okay, Dad, I'm ready. No, 7:50, because we supposed to leave at 7:45. And he came in at 7:50. He was like, okay, Dad, I'm ready, right? Let's come over here to the 7:50 candle. 7:50 right there. This candle right here, right? He said, I'm ready. I said, okay. I start to leave a limit order here. I was like, I started to leave a limit order here, but I did it. I did it because I was like, Tim, don't leave the limit order. It ain't time to trade. You ain't gonna be able to sit here and manage it in case it start going against you and doing something you don't like. So just don't do it. I came back and I almost cried. Look at this. Look at this. Look at this. I almost cried. Them just jokes. I didn't almost cry, but I did almost put a limit order right there. I did almost put a limit order right there. But live trade another day. Why do I have this consequent encroachment marked out right there? Let me share that real quick, and then we're gonna call it. I marked out this 15-minute wick right here, that consequent encroachment, because I want to see how price reacts. We have offered buy side and sell side in this entire area right here, right on the 15-minute. All of that, we have offered buy side and sell side to all of this area right here. Let's go from the bodies of the candles right here. I could go from the wick, but I'm gonna go from the bodies of the candles right here, right? We've offered buy side and sell side to all of this right here. Get this together, get myself together, right? So we've offered buy side and sell side throughout all of that area there. All right, let's go down to 5 minutes, right? That wick, that 5 minute, that candle, that 15-minute and 5-minute candle is the exact same size of the wick, right? That's consequent encroachment on that very long wick, right? Why did I pick that out? If you come down to the 1 minute, right? If you come down to the 1 minute here, this low right here, right? That low right there is the last low before, you know what I'm saying, coming up and taking out this high right there. So when we come back down, if it comes back down, I want to see how price reacts to that consequent encroachment, because there is a 1 minute BISI, right? But it's inside this area right here that can potentially be a balanced price range if we get a nice push away from it, right? If we get a nice push away from it, all this right here can be a balanced price range. And now that we've gotten above it, we're kind of consolidating here, right above this area there. Like the algo ain't really trying to go back down there, right? And it's skating across the top of this fair value gap. So I got that consequent encroachment there. That's kind of like a, not really a last line of defense, but if price came down to that consequent encroachment, and let's say price wanted to come get this 1 minute BISI here on this 810 candle, I would want to see price come down, take out this sell side, right? Because that's the last sell side before going up. Take out this sell side, hit this 1 minute fair value gap, and reject up. A nice strong rejection above this consequent encroachment would give me a strong feeling about, okay, we're going to continue up, right? Even if we got like came down, got the sell side and got a rejection and close close to the consequent encroachment, but I would really like to see it take out this sell side, hit that 1 minute fair value gap, reject up, and get above that consequent encroachment. That's why I put that there. That's what I'm watching with that. And that's the overnight price action. As y'all see, we this morning I had marked out some divergence. I came in here like it was like 6, a little after 6, and the Dow had taken out this low from over here at what time is that? The 1600. So the close of yesterday, right? So the close of yesterday, the Dow had taken out yesterday's low already. The NQ had not, and then the ES had not, but the ES came out and took out yesterday's low eventually over here on this 714 candle. It eventually did take out yesterday's low and had a nice rejection off of it. The Dow took out yesterday's low, and then the Dow came back again At the same time, the ES took out yesterday's low and poked below that low again and got a really nice rejection. Like once it went back below that low again, look at how the Dow rejected off. It came all the way back above the consolidation from overnight. The Dow had a really nice rejection. The ES had a rejection too, but the Dow had a really nice rejection off of that. And then the NQ is still holding very strong. I marked out this volume imbalance right here. This is a 60-minute volume imbalance. So now that the shout out ICT talk about the price laying a body over the volume imbalance. So now this volume imbalance has been satisfied. It's been satisfied because it's an hourly volume imbalance, and now there's an hourly body that trades through the price. Like this candle, this 8 o'clock candle got a closure below that bullish volume imbalance, and now price pushed back above it. So now this volume imbalance has been done. I can remove that now, right? So we got a body closure over that volume imbalance. So now, and that being on top of that volume imbalance, that also lends to maybe trying to push up a little bit more. Do we have to? Nope. Do we? Oh, we just came down. Did we just come down to? We just came down past consequent encroachment. Do we have some kind of news? Did we have some kind of news? We just came down past the consequent encroachment. I really would have liked it to take out this sell side and hit that these 1 minute candles, hit that BISI. I really would like it to hit that BISI and then reject back off of it. Right there. I really would see how we came down and we closed above it. I really would have liked if we would have came down and took out that sell side, hit that BISI, and then went back up and closed above it. Like I was talking about how this came to wick down and then it closed above it, come down, hit that BISI, and then close above it. We just took the sell side, hit that BISI, and then close above it. There you go. There you go. Right there. Then push back up. I should take me a piece of that. I should take me a piece of that. I should have put my trade in because it just, I should have put my trade in. I should have took me a piece of that. Let me see what, if we, see if I want to get me a little piece of that. Come here. Open up window. I'm trying to get a piece of this. It's gold. God dog it. I let it do what it do. I ain't gonna force it. I ain't gonna force it. Let me see what y'all got in the chat here. See, we done hit this. We hit that 1 minute right there. I want us to get back above. If we reject this and get back above that right there, that'd be good. I should have had me an order in right there, so I could have got that. That would have been that 5 points right there. Is that 5? Yep. 7. No, 5 is up here. It's from the low to there. Yeah, 5 is up here. Right there at the break. 5 is at the break right there. Let me see what y'all got on here. You know you can use replay to hide the right side of the chart, right? You say use the replay to hide. What's that? You know you can use replay to hide the right side of the chart. What is that for? I missed something. Good morning. Good morning, Tim. We took sell side liquidity around 7 a.m. Would you wait for price to retest sell side during the kill zone? Sell side liquidity 7 a.m. meaning yesterday's low. So for that, all right. So for taking out this sell side right here and rejecting here, right, on the 7 a.m. candle, right? I wouldn't wait for a retest of this sell side right here. I would just wait to see what price is going to do with, like, pretty much what I just said. What I just said as far as coming down to that 1 minute fair value gap and closing back above this consequent encroachment would make me feel like, hey, we're going to continue up, right? That's where it is right now. If we fail to, if we, like, that theory breaks down, right, during the New York session, and we come back down below this low again, then I would want to see another rejection off of there, and then it gives me some kind of setup to the upside. And the reason why I say again, because I don't want to retest it unless it does it and then forces it upon me, right? So now we came down, we took out the sell side, right? Then we pushed up and we came very close. We equal highs there, right? So equal highs, right, is like a rejection. So we start looking down. So we come back down here and we don't come back to that low, right? So that's a rejection. So now we look for that high there. Now from there we came up and we took out that high, right? Got into an imbalance, right? So now that we've taken out that high, right? We've taken out that high, and now we're trying to see, are we going to get distribution through, or are we going to reject, right? So right now, right, we haven't gotten the full distribution through, right? And now we're coming back to an imbalance. So now this is like the air where I was talking about this, the last line of defense. I want to see us come down, take out this sell side, because this right here was the last low before coming up, taking out. I want to see us take out this sell side and reject it like we just did, but I want us to stay above this consequent encroachment, because that will make me think the bullishness is going to continue. But if this fails and we keep coming down and break this low, then okay, if we come back down here and test this again, then I want to see the rejection and the process starts back over. The process of running the sell side, taking off, right? Coming down, getting the break in market structure, coming back to right there. So cause this is the rejection, right? This is the break in market structure. This is the retrace back to the imbalance. That's why I was like, man, I should have took that, right? I should have got a piece of that. But I was like, I ain't gonna force it. It ain't trading time. The same thing I did over here, right? I'm like, I ain't gonna force it. It ain't trading time. It ain't time to go. But I'm like, you see what I'm saying? So again, I know I babbled a lot, but so let me say it clear. We took the sell side on the 7 to 10 candle, around the 7 o'clock hourly, right? We got the rejection. That's the rejection, right? So once we got the rejection, we came up and we got the break in market structure, right? We got the break in market structure, and this right here is the pullback to the imbalance right there, right? That's the pullback to the imbalance, and there go the 5 points right there. And I'm taking it, but I'm not gonna force it, right? And then if we come down and do a retest of the lows, as you know, we call it, if we come back and retest this low, it got to start back over again. We need the distribution back up, right? Then we need the break in market structure and have the imbalance to come back to. The process just starts over. If it, you know what I'm saying, if it gets back down to retesting the lows, the process starts over. Hopefully I explained that good. Can you please explain Power 3 and also nope, not today. Not today. Not today. It's 30 minutes in. We got videos that we talked about that dark moon. I jalapies. It's 30 minutes. The market is open. The market is open. The market is open. We've talked about the Power of 3 in many videos. ICT got Power 3 videos. But it's time to wrap it up. I thank y'all. I thank y'all. I thank y'all. He got videos on daily profiles. Just go to ICT. If you go to the core content, he got, daily profile videos on there. I thank y'all. Hopefully I shared something that was helpful to somebody. You're very welcome. Okay then. Oh, y'all got me trapping. Here to learn to share. Oh man, I promise you, I need to put you on payroll. I need to put you on. Before we get out of here, please bring your attention, draw your attention to that side of the screen over there. You see I'm hovering my mouse over a ticker symbol right here that says SPY. That's the ETF that tracks the S&P 500's performance. Around here, we call it Spylene. Even wrote a song for it. Want to hear it? Here it go. 1, 2, 3. Sing it with me. Spylene, Spylene, where you at, baby? Here I go. Hey, how you doing? I'm glad that you came through. Spylene, girl, what you about to do? Spylene has had a slight gap up. Slight gap up, as we spoke of yesterday. Spylene did not take out the sell side liquidity like the ES did. We are very close. I marked out that sell side liquidity because I would like to see Spylene take that liquidity and reject it. And reject it. So that we could get back up into a, let's do, we're gonna give you one more thing that I'm watching before we get out of here. Right? Let's look at Spylene. We'll use Spylene for example, right? So tomorrow's GDP, right? Tomorrow is GDP. The market tends to try to get to a fair value before big news drops, right? So now, what am I looking at, right? I'm sorry, y'all. I'm sorry, y'all. I'm sorry, y'all. All right. Let's go to the ES so I like to use the ES, right? Okay, so what was that? Oh, that was the 1 minute. I'll leave that in there. Phil Benucci, leave that in there. Okay. All right, then Monday gaps. Okay, so the market like to try to get to fair value before big news, right? So looking at what we've done, we've come down, right? Made a low, then we come back up and we've had a break in market structure right here. And now we've traded back down and we're at that break in market structure, which means we're here at this breaker, right? We're here at this breaker, right? And y'all remember, my what I said about the SPY, me wanting the market to come to these areas, right? Come to these areas because that will bring us back to this breaker and to this imbalance, possible entry, and to this imbalance, preferred entry. Why is this a preferred entry? Because it puts me down, below pretty much around mean threshold of that breaker, right? Why does my thing always, I don't know why it does that. Right there. See, around mean threshold of that breaker, and right here at this order block, right? This bullish order block, and its consequent encroachment of this lower BISI, right? So we got a lot of confluence here. Mean threshold of the breaker, the open of the order block, and the consequent encroachment of the BISI, right? That's why that's my preferred entry. Now, looking at knowing what the market likes to do prior to going into big news, right? Which is get back to fair value, right? What I'm watching right now is what are we going to do today, right? So looking at this entire move right here, right? Equilibrium puts us right in that same area, right? Equilibrium puts us in that same area of where I was saying my preferred entry, right? That's another reason for this bit that puts us back to equilibrium fair value of this move right here. Nice place to take a long entry off of, right? Nice buyable pullback, right? So that's fair value for this entire move, right? So can the market melt down all day and get down there? It don't feel likely to me. It can, because we had a huge day yesterday. So, and then we just came down and took out yesterday's low and kind of rejected off of it, right? So now then I turn my attention to the last time the big boys started buying, right? How do you identify when the big boys started buying? Okay, looking at your daily candles, right? You see this down close candle right here with that heavy rejection. We came below. Let me move my arrows, right? We came below that sell side on this day and then rejected, right? So that's a telltale sign that some big boys did a lot of buying, because we came below a low and rejected, right? So from the last time the big boys started buying heavily to the high where we are right now, we are at equilibrium. We are at fair value right now. So I anticipate the day to maybe be kind of that, you know, that's the exact sound I hear in my head, right? So that's what I'm anticipating, right? Now, you can, you know what I'm saying, you can go deep into the rabbit hole if you want to and say, okay, what if it start to push up? Okay, if it start to push up, then I just look at the consolidation range we've been in, right? The lowest low of the consolidation range, which would be yesterday. I'm sorry, right? And if we started to go up, equilibrium is right around 41.45, right? Do I think it's going to do that? I don't, because we had a huge range day yesterday, right? And typically, when you this probably gonna be like my financial advisor like to say, everything and nothing day, because we had this huge range that brought us down to equilibrium, right? Because all it did was melt all day yesterday. Speaking of power three, for dark moon, if you haven't got pissed off and left, right? Yesterday was a power three day, right? We opened, right? We opened at 41.57.25, right? We went up above that open, right? We went above that open, right? We went above that open to 48.50. And then the market went as low as 40.90, 40.91.50. And then we closed near the low at 41.09.25, right? So when you see power of three is you open power of three to the downside, right? On any time frame, you open, you go above that open, you sell down, and then you close near the low. That's power of three explained. Power of three to the upside, right? You open, you go below that open, you go up, make a high, and then you close near the high. Power of three to the upside. Power of three to the downside, power of three to the upside. Any time frame you're looking at, the opening time frame, you go below the time frame, you go back above it, and then you close near the high. You open, you go above the time frame, you go below the time frame, and then you close near the low. Power of three. There you go. You got your wish. You got your wish. All because we started talking about something else. There you go. Look at God. Won't he do it? He said he would. I think it's time to use the LRT fib to find equilibrium. Little Timmy Rogers fib. ICT did say he doesn't trade the AM session session after long range days. Yes, because like Dustin like to call them, everything and nothing. It's like you do everything the day before and then it's like nothing the next day. What are you laughing at, CZ? Thank you for explaining power of three for Dark Moon. You're welcome. Dark Moon probably gone. Dark Moon, are you still here? Are you still here, Dark Moon? Dark Moon. Are you still here, Dark Moon? Dark Moon. Hey, Dark Moon. Are you still here, Dark Moon? Why do y'all come to my lives? I'm such a freaking troll. Why do y'all come to my lives? I would hate me if I was y'all. What's up, Dark Moon? What's up, Dark Moon? I needed that review. Bye, Felicia. Demonachi. I did that so the comment could bring Dark Moon back. Hey, I think that's it, man. I think that's all I got. Snatched 43% on these TQQQ calls. I bought at close yet. That's what's up, man. Look at Father Legends. Look at Father Legends. As you can see, the chat enjoyed the Power 3. Please made a podcast about those two subject daily profile. What? Dark Moon, where you from? Where you from, Dark Moon? I'm be trying to put me add work on my schedule. What time is it? 9:45? What time is it? 9:45? The day probably just gonna be The day probably gonna be a nothing day. So the probably gonna be a nothing day. I don't plan on doing that. Hey, while I'm getting ready to talk about this, hey, shout out Big Draco. Shout out Big Draco. Big Drake. I talked to Big Draco the other day on the phone. We was talking about like Apex accounts and stuff like that. And I text Big Draco yesterday. I say, Draco, I'm about to follow in your footsteps, right? And so basically, I talked to my wife yesterday about it, last night about it. And it's like, whatever we want to do from this moment forward, whatever we want to do from this moment forward, as long as prop firms be around, I'm gonna pass an evaluation and create a new Apex account for whatever we want to do. And it's gonna be and I advise, if you are a disciplined trader, I say do the same thing. Like we going to go to Dubai next year, right? Dubai Apex account, right? I'm gonna get a Dubai Apex account. This Apex account, that Apex account. You can have up to 20 of them, right? You can have up to 20 of them under one login, right? So whatever we want to do, I'm gonna have an Apex account for it. Long as they running sales, and I can get it for the low, I'm gonna have an Apex account for it, right? And I know you're probably thinking, Tim, that's a lot of. Look, man, these people that y'all see ICT interviewing, man, these guys be having 8, 9, 10 different funded accounts, right? And the only thing they doing is, like, just think about it, right? Just think about it. Remember when I was like, I'm gonna feel it out to see how I like it, see if I like how it's going, and once you got your system in place, right? I was gonna talk about daily profiles, but I ain't gonna talk about that because I don't feel like it. Once you got your system in place, right? I ain't got to the point where I need to buy a repeater yet, right? I ain't got to the point where I need to buy a repeater, because if I'm, you know what I'm saying, just going through like 3 accounts, I can, that's easy. I can just, you know what I'm saying, I got all of them on the screen, limit order. You know what I'm saying? Once I get into the trade, I ain't got nothing to do. But if I get up to the point where I got 5 or 6 accounts, then I'll spend $150 on a repeater where I can just trade in one account and then it does it in the other accounts for me, right? But think about it like this, right? If you got 4 $250,000 accounts, right? 4 $250,000 accounts. If you played it safe, right? If you played it safe, right? Right. Right. If you played it safe and only tried to make 1% a month in a $250,000 account. So you played it ultra safe and only tried to make 1% per month in 4 $250,000 accounts, right? That's $10,000 per month. And that's playing it ultra safe, right? So where I used to go wrong with my trading, right? I'm like, anti-prop firms. I ain't working for nobody else, right? I ain't working for nobody else. I ain't do. And then I started thinking about it. I'm like, if I want to make $10,000 a month in one account, right? In one account, if I want to make $10,000 a month in one account, I would need to do it with the same amount of risk tolerance. I would need my personal account to be $1 million. I would to do it with the same amount of risk, the same amount of lack of stress, the same amount. I would need my personal account to be $1 million, right? Right? We don't have $1 million in our personal account. So if I'm trying to get $10,000 a month and I don't have $1 million in my account, now I'm going to have to over leverage. I got to over leverage if I want to make $10,000 a month, right? This part, the fool rules don't tell you. Now, yeah, true. You can go in there and make $10,000 in a month without having $1 million in your account, but you're going to be severely over leveraged. You're going to be stressed. You're going to be trying to make these huge home run trades every single day. You're going to try to make home run trades every single day, right? How many, let's look at the calendar. How many trading days are in a month, right? All right, let's take the month of April. 5, 10, 15, 20. 20 trading days in a month, right? 2,500 divided by 20, right? That's $125 a day if you traded every single day, right? If you traded every single day, and you, not saying you never lost, but you made $125 and you traded every single day. Not saying that you didn't take a loss. It's just like in between the losses and the gains, you cleared $125 per day, right? You cleared $125 per day, right? How 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 hard is it to like keep this up over an extended amount of time, right? Very hard to trade every single day and to make $125 a day over extended amount of time, right? Very hard, super hard. But guess what's even a more cold realization than how hard it is to do that right there? Come real close. Y'all come here. Come real close. Come here. Come close. I'll meet y'all halfway. Come on. I'll meet y'all halfway. Oh, no, that I can't meet y'all halfway. Come here. Come close. That's only making $2,500 a month. And we just said that's extremely hard. And that's only making $2,500 a month, not 10,000. Did y'all get that? Did y'all get that? Because when the gurus start giving you the numbers, they don't give you the whole reality behind those numbers. Remember when I started this out, I said if you have 4 accounts at $250,000 per account, and you kept it simple and tried to get 1% a month, right? 1% a month. in each account. Right? Now, go back to every single day trying to make $125 a day for one account. $125 a day for one account every single day. That's only $2,500. And we said that was very hard to do. So when you're using one account, these big lofty goals that people put on the internet, like, oh, I made 10,000 this month, you can do it too. It's all about the amount of capital that you're trading with, that you're leveraging with. And we just said, clearing $125 a day for 20 days straight is extremely hard, because you're going to take losses. It's going to get to you mentally. You're going to be like, man, you're going to spiral. You're going to have days that don't give you trades. So you're not going to be able to trade 20 days straight. You're going to have all it. Then you're going to start worrying. Man, I didn't trade yesterday. I didn't get a setup today. Tomorrow GDP. The market ain't giving me what I want. I can't trade. It may be you might have 3, 4, 5 days you can't even trade. So now you're trying to make up for them days you didn't trade. Now, when you got the capital at your disposal and you can afford to take your time and shoot for lower hanging fruit, that's why now an account for everything we want to do. Want to go on a trip? Big trip next year? Account for it. Want a new truck? Account for it. Want to what? Account for it. Kids did account for it. No matter what it is. And then once it get to the point where, okay, now I got 5, 6 accounts, your trade copier. And what does the trade copier allow me to do? It allows me to just trade. I set it up. This the main account. These are the slave accounts. I trade in this main account. It does the same thing in the slave account. So I'm just like I'm trading in one account. If I win it all. If I lose it all. But it don't matter because I'm just following my system. I got my system down. And yeah, Apex gonna copy my trade. Who cares if they copy they tell you when we put you in a performance account, we're going to copy your trades. And if you start performing good enough, we're going to put you in a real prop account. You're going to be trading in a real prop account. If you stay consistent enough, we're going to put you in a real prop account. But while you're in this performance account and we're paying you, we're going to copy your trades. And then when we put you in the prop account, we still going to copy your trades. So now we're going to be making 10% off of you and 100% off of us. So we're making 110% every time because we're copying your trade. So we're getting 100% of the trade you're doing, and then we're getting 10% off you. And I don't care if they do that. A lot of people get mad. They copying your trade. Copy my trades. I don't even know how I got on that. I receive it. I receive it. A millionaire trader. We need to have an episode on trading as a business. Time to take this thing to the next level. What's the name? What's the name that did that a few times? What's the name? Abby. Abby done did that a few times, trading as a business. The relationship accountant, she done did that a few times, trading as a business. Brings truck to the bank. Would you only be trading futures in your Apex? Yeah, I only trade futures in my Apex account. I don't do Forex. Like you can do Forex and Apex. These prop firms, they allow you to do Forex. Well, I'm not a Forex trader. I only do futures. I only trade futures. So I trade futures in my Apex account. I trade futures in my personal account. But yeah, I was talking to my wife. She like, hey, we going to Dubai next year. She like, we going to Dubai next year. And I was like, oh yeah, what's like the, I know when I wanted to go for my 50th, you was like, you ain't gonna spend all that money. And she was like, yeah, but we're gonna do it next year. And I was like, okay, what's the, what's a rough estimate of it? She gave me the ticket. I said, okay, I'm gonna do another Apex evaluation. I'm gonna do another Apex evaluation and let Apex pay for it. Let Apex pay for it. Yep. And then the stress level, and because you got to think about it like this, man. You got to think about it like this. When it comes to trading, you want it. At the end of the day, it's about making money. Right? At the end of the day, it's about making money, right? But we want to do it. We want to make as much money while risking as little money as possible. Right? You want to do it, you want to make as much money as you can while risking as little money as possible. Right? So what's the easiest way to make as much money as you can while risking as little money as possible? Right? That would be to, if you now, listen to me. If you are not a consistently profitable trader, if you do not have control of your emotions, if you are not comfortable with like knowing that you're in a live account, do not run out and try to pass a prop firm challenge. Please do not. I'm speaking to the people who are very comfortable with their trading strategy. People who are consistently profitable, as ICT say, people who are bored with their setup. If you're bored with your setup, I'm talking to you. Once you get bored with your setup, then I feel like it's okay to take a prop firm evaluation. And why is that? Because especially when they have a sale, even when they don't have sales, it's a small investment compared to what you can gain, right? But when they're having sales 80 and 90% off, right? Let's just say 250,000 Apex. I know the numbers on theirs. $250,000 account, right? 90% off. You pay $55 and some change, right? You pass the evaluation within 30 days, right? Then you pay $290 one-time fee for the assignment. So you're in, just say you're in $350 total for easy math. You put $350 in for easy math. You've invested $350, right? Now, you are comfortable with your trading setup, your trading model. You're bored with it. You go into this account where you invested now you took 300, imagine you take $350 and put it into a Ninja Trader account, right? If you got $350 and put it in a Ninja Trader account, you can only trade the MES because you don't have $500 in there to be able to trade a ES, right? But that $350 investment to pass this $250,000 challenge, right? Now you got the opportunity to trade the ES, and now mind you, now you don't have 250,000, right? But all you got to do is not lose $5,000, right? All you got to do is not lose $5,000, right? But you're very comfortable with your trading setup. So you invest $350, right? All you got to do is not lose 5,000. And if you not lose 5,000, right, the first 25,000 you able to withdraw belongs to you. So let's just say you make it all the way to 25,000 and you withdraw that 25,000, you know what I'm saying? And you're happy, you don't want to do it no more. You invested $350, but you made 25,000. Right? And then not even thinking net lofty. You invest $350. Now you can trade the ES, right? All you got to do is not lose 5,000. All you got to do is make one profitable trade, right? All you got to do is make one, all you got to do is make one withdrawal of more than $350 and you at break even. You ain't got no more risk on the table at all. You ain't got a dime at risk anymore. Because all you got to do is make one withdrawal of more than $350. You ain't got no risk on the table. All right. When I start thinking about it like that, I'm like, Tim, you've been thinking about this all wrong. You've been thinking about the prop firms as a job, as working for somebody. Because I hear people complain about, oh, they got rules and it makes sense for them to have rules. Because there's people out there that's scamming. It's people out there that's trying to get over. So it makes sense for them to have rules. What's wrong with following the rules? You're an honest person, right? Them having rules shouldn't bother you. As long as they paying people, I'm going to ride this thing till the wheels fall off. You hear me? You hear me? The market ain't doing nothing. So that means the real accounts they provide is not actually real accounts. I don't know about all of the prop firms, but I know Apex, when you're in the evaluation account, it's a sim account. You're not trading real money. When you're in the performance evaluation, the performance accounts, is a sim account. You're not trading real money. But in the performance accounts, they're copying your trades, right? So they watch you during the evaluation account. Period. They watch your trades through the evaluation, right? Once you pass the evaluation, then you move into a performance account. You're still not trading real money for them, right? You're trading sim money, right? But they're using AI to copy your trades, right? Because they watch you during your thing. So now they're copying your trades during the performance account, right? But during the performance account, you're getting paid, right? So the first 25,000 that you withdraw during your performance period comes to you. So the way they make their money during the performance period is by copying your trades, because they're paying you to do this, right? And then once they see like, man, this person can trade, then they put you in a prop account. Then you get, and when you're in the prop account, now you're trading real money for them, right? And it's a 90-20 split. You're getting 90% of that real money. They're getting 10% of that real money, but they're copying your trades. So they're also getting 100% of every trade that you make. I have heard that most of the prop firms give a fake account, even though they say it's a real account, and they make money from the evaluations and the other. Yeah, they don't. I don't know about other prop firms, but Apex tell you, they be like, hey, during the evaluation and the PA accounts, you're trading in a sim account. You don't trade in a real account until they award you a prop account. That's what I like about Apex, where it's a 3-stage process, but you start getting paid at stage 2, right? You don't have to test and test and test. It's like you test, right? Then you start getting paid. And then based off your performance in that second step, they say, hey, this person fire. Put them in the real account. And they do it. You don't have to ask for that. They just do it. You know what I'm saying? They put you over there. Yes, you can use TradingView with Apex. Shout out Father Legends. He asked, but you have to do it. You have to be, I think it's through Tradeovate, if I'm not mistaken. Ninja Trader bought out Tradeovate, right? But Apex, they offer rhythmic accounts and Tradeovate accounts. And the Tradeovate accounts, you can trade through TradingView. Like if you sign up, if you like, because they got two different what's the names, right? They got the rhythmic, the Tradeovate accounts cost like a few dollars more, because it's based off like how much they charge them to do it. Like I guess Tradeovate charge more than rhythmic, so the rhythmic account it's like $10 or $20 cheaper. I can't remember. I don't use Tradeovate, so I just bought the rhythmic version of it. But you can this was a link that I sent in the Discord yesterday, and it talk about connecting TradingView using Tradeovate. It tell you how to connect your account through TradingView, and you can trade through TradingView through Apex, because I trade through Ninja Trader for Apex. Like I don't use the rhythmic. You got to download it and put it on your computer, but I don't use rhythmic. But you have to download it because it's like what they do it through. But I just and I connect through Ninja Trader using my own. I got my own license key for Ninja Trader, so all I had to do was just set up a connection through an Apex connection. I set up an Apex connection using my Apex username and password, and I use my own Ninja Trader license key, and it's just I just have 2 different connections connected on my Ninja Trader. It's like connected through my my live, and it's connected through my my Apex. All right. Let me hold on. Let me hide my like when I set up the Let me hide my information. I don't want y'all all in my business. Let me hide my account. I thought I could move that out the way. I can't move that out the way. Oh, I know what I can do. I'll just move the columns over. I'll just move the columns over. That's what I can do. I can move the columns over. Hold on. I named the when I started doing it, I just named the when I started doing it, I just named my thing. I had like Live Ninja Trader. I made a connection. I made a connection called Live Ninja Trader. I made a connection called Apex Eval. And then when I go and log in, as you see over here, right? That's my sim information right there. I don't want to put it, be putting all it be having like Apex be having like all your information on there, so I don't want y'all to see all that. But like you see at the top, that's my sim account right there, and it's under my Live Ninja Trader connection. That's my personal account. It's under my Live Ninja Trader connection, and then the Apex, my Apex stuff is under the connection called Apex Eval, right? So it's like that's what I named the connection. And so, you know what I'm saying? And every time I start, and you can see I started another Apex Eval yesterday. When I was talking to my wife about going to Dubai, I was like, hey, I'm gonna let Apex pay for it. So I started another eval yesterday. Got that 90% off. So you know what I'm saying? Once I pass that one, it'll just be up here, just like this Apex account right here. But I just have to when I go into the connections, I just have to make sure my my live connection connects automatically. And then I just have to go in and click on connect to the go to each one of these accounts and make sure it's just, I mean, not each account, but yeah, make sure each one of these are connected. And then it just, you know, I trade like normal. But for now let me put my columns back how I like them. Y'all out here all in my business. Somebody already talking about, I thought you was $1 million trader. Get out of my business. Yeah, but when you sign up for like if you go to Apex, right? If you go to Apex and scroll down, you see right here it says select your rhythmic plan, rhythmic / ninja trader, right? And then they show all of their plans right here. Like for example, look at the 250 for this right here. It's a $517 a month, right? And then when you keep scrolling down, it says select your Tradeovate plan, right? Tradeovate Ninja Trader, right? So these the trader. So if you're gonna use Tradeovate, you got to pick one of the ones down here, one of these. They the same sizes, but see, it's $20 more. See, it's $537 as opposed to $517. Where your five, so the Tradeovate plans are like $20 more. And I guess Tradeovate charged them more money. And like you would pick, like if you use Tradeovate, you would pick, like if you want to pick one of these right here, you would pick the plan you want under Tradeovate, right? On the part where say pick it right here, under select your Tradeovate plan. Because this is the one that's going to allow you to set it up under Tradeovate, right? If you don't use Tradeovate and you know what I'm saying, you can just pick the one that sets it up under rhythmic. Because I use Ninja Trader. You can use Ninja Trader for both. You can use Ninja Trader for the Tradeovate. You can use Ninja Trader for the rhythmic. But since I don't use Tradeovate, I just pick the rhythmic because it's $20 cheaper. It's $20 cheaper. So that's why, but everything else the same. Everything about them is the same. It's just the amount that Tradeovate charges them. So they pass that cost on to you. Does any of these funds allow options, or is it just futures? As far as I know, it's futures and forex. I never looked in it for options, so I couldn't even answer that. As far as I know, it's just futures and forex, but I haven't looked for it. What's the name? Go with Apex. I used to like Blue Knox, but they pissed me off. What, they're Blue Knox? I never heard of Blue Knox. Retesting lows. Let's look at the chart. Yep. We getting us a little meltdown. Melt down. We coming up on that cash queen encroachment. We're coming back to that cash queen encroachment. Melt down. Let's go to the. Is that calculator blocking y'all? Oh no, it's just blocking me. Sorry. We just hit that cash queen encroachment. Again, let's go to 15-minute candles. 15 candles. Okay. We're pushing through that consequent encroachment. Hit that consequent encroachment. We are 27 points. Let's go look at the side. We just hit the midpoint. 27 points. I mean, 22 and a half points. I'm sorry, I said 27 points. Okay, that's the gap right there. That's the bottom of the gap right there at 40.73.75. And then the top of the gap is at 40.96.50. That's the gap right there that we're in. That's the gap right there. Man, look at the Dow. Look at the Dow dumping. The Dow dumping. The NQ still holding strong. The NQ is still holding. Let's go see what the Dow rushing toward. Let's go see what the Dow is rushing toward. Oh, it's a fair value gap down here on the Dow. There's a BISI. There's a BISI on the Dow right there. It's a daily fair value gap right there on the Dow. I'm like, man, what is the Dow dumping toward? Daily fair value gap right there on the Dow. Right there. Mean threshold of that breaker. I mean, mean threshold of that, yeah, that breaker. I'm sorry. I said it right. Yep. Mean threshold of that daily breaker is right there. Fair value gap right there. Yep. That would be a nice pullback right there because we came up, got a breaking market structure right there. Consolidate a little bit. Nice little pullback into that breaker. Fair value gap. That's the same setup I was looking for on the ES. That was the same setup I was looking for on the ES when I was talking about the SPY, the breaker, that same breaker. Mean threshold on that breaker be further down here though. It will be down here. Look like the Dow is lining up more so with the possible entry that I was talking about. All right, so the Dow look like, so the possible entry is there. Preferred entry is here. Let's see if we can eyeball that. No need to eyeball it, Tim. No need to eyeball it, Tim. You could just put the YM under there. No need to eyeball it, Tim. No need to eyeball it, Tim. All right, so. Yeah, it's about the same. The preferred entry. Yep, that's about the same. Yep, because there's the yep, there's a fair value gap. There's the mean threshold of the breaker. There's another smaller fair value gap right there. And then with the ES, there's the breaker. There's preferred entry. The mean threshold was right around there. So that's pretty much, that's about the same distance. That's about the same distance from the preferred to there, from there to there. Yep. That's making sense. Let's look at the NQ. See what the NQ look like. Cause the Dow dumping to get down there. Dumping. What did I hit? Hit the wrong thing. Oh, I know what I did. Oh, I checked a wrong thing. I'm tripping. I need to come here. Then I need to go there. NQ. NQ. You see the NQ slightly different. The NQ consolidating above this high right here. NQ, and see the NQ came down into that fair value gap, stopped at this order block yesterday. So the NQ consolidating right here above at this, the NQ like stuck here, holding up strong here. Now the Dow and the ES pulling back into these imbalances. So if the NQ was to pull back and just take out this low, maybe even this low right here, right there, NQ pull back and take out that low, maybe even get down, even if it take out that low and reject it, that would give the Dow time to come to that imbalance and the ES time to come to that imbalance. That'll play out good right there. It don't even have to take the low really, but if it came down, took the low and rejected it, that would make me feel good about it. Take that low and reject it. That will make me feel real good about it, because where it's consolidating at, that's a nice target to bring these down into these imbalances. Into those imbalances. Because it's very close. Like if you look at the same low on the ES, if you look at the same low on the ES, which is right there, that same low on the ES right there, the NQ is a lot closer to that low. So if the NQ came down and took that low and rejected it, that would be enough to pull the ES down into this imbalance without taking that low and giving a break in market structure to the downside. Just be enough to pull it into the imbalance to continue back up. And that'll be enough to run out the sell side, attack sell side, to get money from people who trailed their stops up here, take them out the game, and then proceed back up. Yes, 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 y'all. And it don't stop to the beat, y'all. And it don't quit. Yes. News in 6 minutes. Oh, yeah. What was that? The oil? Hey, man, how do you diversify your investments, trading, treatment as a business? Hey, man, get out my personal business, man. Talk to your certified PDA. Is what the financial people. Talk to your financial advisor and your PDA. Clap it up for Tim. Guys, set me up tons of Jim. I appreciate that, Divadio. Appreciate that, FC. Talk about the petroleum. I think it was the petroleum numbers at 10:30. I think. I don't know. I was ignoring those. We flirted around that consequent encroachment, filled in this fair value gap there. That Bissy, filled that Bissy in, flirting around that consequent encroachment. Still got heavy divergence on the Dow. The Dow came down, attack. What we said, the Dow was going heading toward that fair value gap down there. Yeah. I think it was a fair value gap it was heading toward. I ain't been drinking. I need to drink because I got to go to the gym. Got below this low right here. April 6th. The Dow just came below April 6th low. That little small swing low right there. Got below that. Still haven't gotten to the fair value gap, but it did get below that low right there. Right now, having a nice rejection to that. Same thing with that consequent encroachment on the ES. CPA. I said PDA. CPA. That's it. That's it. CPA. I said PDA. That's public displays of affection. Hey, CZ, talk to your CPA, man. Talk to your I got a financial advisor. His name Dustin Tidbits. Talk to your CPA. Hey, man. I'm finna call it because I got to make sure I got to finish hydrating myself so I can get ready to go to the gym. It's 10:33. I appreciate y'all for hanging out with me, man. Hopefully I was able to share a little bit of insight into ideas of maybe a way to utilize this game. Utilize this game. I can say shout out Big Draco. Big Draco gave me the blueprint, and then looking at like different people, like sitting down watching them ICT interviews. I'm sitting there like, man, these dudes are freaking geniuses. Freaking geniuses. And it's this one guy that I oopsed up on YouTube. This dude like the prop firm king. This dude stay taking prop firm challenges. I'm like, man, I'm sitting there thinking like, man, why do people take so many prop firm challenges? I'm like, why not just get one big one? And then I was like, it makes sense because if I get one big one, if I want to make more money, I got to risk more. But I can, if I got multiple smaller ones, all I got, I just get another smaller one and still risk this little amount of money, but now I'm making additional money because it's a different account, but I'm still risking a very small amount. I'm this much in every account, right? But like I say, 2,500 in one account, but 2,500 in 4 accounts, I'm still risking the same little bit of money, but I'm making 4 times the money. Whereas if I had one account, I got to risk more money to get more money. Thank you for your time and sharing your thoughts. Have a great day, everyone. See y'all tonight, if the Lord says the same. I ain't never heard it said like that, but I'm going to steal it. Because everybody I know since I've been a kid say, Lord willing. My mama say that all the time. My homeboy named Tim, Lord willing, he say that all the time. My mama say Lord willing so much, I refuse to say Lord willing. My mama, everything Lord willing. Mama, can you pass me that piece of paper? I sure will, Lord willing. Girl, you passing me a piece of paper, baby. I'm gonna say, if the Lord say the same. That I'm stealing that one. I'm stealing that one. I'll see y'all tomorrow, if the Lord say the same. I just had my first aha moment using. That's what I'm talking about, Linda. That's what I'm talking about, Linda. It feels good. Yeah. It feels good. That's what I'm talking about, Linda. That's what I'm talking about, Linda. Let's go. Let's go. If the Lord allows. I've heard somebody say that one. I've heard that one before. If the Lord allows. I told you, see that? It feels good. She said it's a great feeling. I love us too. If the Lord say the same, I'm gonna start using that. Congrats, Linda. We're gonna end it on a beautiful note with Linda getting her aha moment using some ICT concepts. Congratulations. It's still, man, when I be seeing stuff do what I thought it was gonna do, it's like I still like it feel unreal. It's been feeling unreal for so long, but it's like once you get that aha moment, you can't stop seeing it. Congratulations, Linda. Hey, man, I appreciate y'all for hanging out with me. I'm sorry for keeping y'all so long. Hopefully I shared something that was helpful to somebody. You know what I'm saying? If I didn't, hey, I'm going to try again tomorrow. Or I'm going to try again tonight at 6:30, man. I'll see y'all later. Do something fun. If you're at work, walk to the water cooler 12 times just for the fun of it. I'll see y'all tonight at 6:30, man. I'm gone.